Hello, everyone. Eric Hatcher with Century 21 market update of what's kind of been going on. They're pulling late numbers coming in, rolling in from November to December. So it's kind of good to see kind of where we're at with the market. So I just want to share a little bit with you guys today. Is it possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup inflation? I've had a lot of people ask me this question about what inflation's doing to the market, what interest rates that are peaking. They've been kind of going up, 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 up. They're starting to like peak a little bit there. And but what I believe, and this is by Bill McBride, but I believe the one thing is certain: inventory will tell the tale. So certainty right now is most important thing to understand what kind of where the market's going to be going. So it's good to be able to make decisions on certainty. And today we're going to talk a little bit about certainty and talk about the all these individual people that are giving us the information that we need to make kind of decisions. But I wanted to share with that about the telltale of inventory low. And this is kind of quite amazing to see how low the inventory actually is. So this is from December compared to December 2020. Inventory is California, we are down almost 28% from year to year of where the all-time low on inventory. Now 26% of the inventory all the way across the state. I mean, look at poor Florida of how what they're doing with their inventory and the people that are moving and needing houses there. So things in inventory are quite low right now at the moment. But months of inventory, this is an interesting stat that just came in. We finally got November's numbers here. And you can see back here in the 19, coming across here. So just your inventories, your average about 4 months worth of inventory throughout the nation. And then this big spike came up right here during the pandemic of the lockdown in 2020. So we had the lockdown. As soon as people started getting out and buying homes, it just completely inventory, the sales, the solds just went kind of completely crazy. And then we had less than 2 months worth of supply of inventory left, and it's peaked up a little bit during the spring and summer, and it's historic low right here of just a 2.1 inventory. I share a little bit about right now with this beautiful January of gorgeous weather that we've had. It's really spiked up. That's interesting in the activity that back out and really strong as soon as the holidays were over. But I want to show this about the showing still strong, greater than last November. So the showing time, this is a showing time opportunity where people actually put in a request to actually show a home. And this is a system that we have as real estate agents. But look from the November to November. So we had about 156 showing of that million people like showing properties during that period, and then 176. So 156 to 176. You can see that the showing, they really started peaking right there, March, April, May, June, July, and look where we're at. We're still way above on the amount of showings that are active, that the activity of buyers actually wanting to see properties. So this is a good sign that we are still very strong, that buyers are still out there looking at properties, which is great. This one showing crush pre-pandemic numbers. So showing index, and this is the last Novembers of all since 2017. But look at the amount of showing requests that are actually happening in the United States on showings right now. So 2021, we just crushed it. So we thought we had a great year in 2020. So they finally got 21, and the numbers were huge there. So what you can see pre-pandemic right here, so we're above that of the amount of showings. So we have more buying activity requesting to see houses right now than what we had before the pandemic. Then we from Mike to the general manager. Traditionally last season, but the data we're seeing tells us that buyer demand remains strong. Region showed a year-over-year increase indicates that buyers are still undeterred to look at properties and speaking to their desire to keep searching for their next home. People want that certainty of having a house to live in where nobody can come and tell them that a landlord or somebody said, hey, I'm looking at selling my home. Please please, it's time to vacate the house, and then go try to find a property, which would be super difficult because the rental market is really strong and really tough to find a rental home at the moment too. So pending sales higher than the pre-pandemic numbers. So that is the pending sales. Look at where they are right now, guys. The pending sales, even though we have low inventory, pending sales are still quite high and way higher than they were in the pre-pandemic time. So I want to share a little bit about what's kind of driving this, about what's happening with the home equity. And you're going to find these statistics pretty amazing that we just got the third quarter from last year. We've got $57,000. This was the average of what the increase into the third quarter of what people actually had for about $57,000 increase average of what the equity in their home increased during that time. That's a 31.1% year-over-year percentage increase in the equity of the U.S. homeowners and mortgages. If you are thinking, maybe should I buy or should I not buy? Look at these numbers here. They're amazing. So congratulations to the homeowners that actually have it, and congratulations to those who are looking at buying houses to be able to get into this home equity, to be able to have this. And look at what the percentage here. And this is actually, that was a national number, but look at California. The average of that third quarter at the year-to-year end was $119,000 increase of home equity during that time. That is incredible for California. You can see it. I think that's probably the highest one out of everyone. Yep, that is. So this is an incredible number, you guys. And so what that's happening there is that's driving the opportunity for people taking money out of their homes, buying a second home, buying maybe a vacation home, and that type of thing as well. Frank Martel, the president, the CEO of CoreLogic, says not only have equity gains helped homeowners more seamlessly transition out of the forbearance and avoid a distress sale, but they've also enabled many to continue. And I want to share that all the time, and they think another crash in the market that you're going to hold a little market kind of settles. One of these four, but let me kind of transpiring. They just got that December number. So guys, we're under 1 million people now in the whole United States that are still in forbearance. They're working out their situation. That means 4 out of 5 homeowners that have loans are working out some type of situation of getting caught up on their payments or making some plans. And that number is continuing to drop. Here, right, that Bolton Smith, the bit of an uptick in 2022, just an uptick. Though from an extraordinary low level, we're not expecting to see a big increase. We expect delinquency rates overall, home mortgages, to actually continue to remain quite low. So quite low. So that's kind of something that we've got it's going to be low, guys. So there isn't going to be this huge surge of all these homes that are going to be hitting the market because of the equity that they actually have in their homes. They're going to, save before they actually lose their home. So people have been asking me, hey guys, where are the rates going? This is kind of an updated version from last month. You've got the first quarter. They are expecting to go up. We've actually seen about a 0.5% increase in the last month or so. And so you're going to see that maybe by the fourth quarter, 3.7, closer to 4. Again, guys, this isn't something that's, things in the world could change these numbers, but we're getting to the pre-pandemic numbers, so that 4%, 5% kind of price point on interest rate. That's still an amazing interest rate. My first interest rate was 9.9%, and I've heard people that are my parents had an 18.5%. So we're still at historic lows. Anything under 4, 5, 6, 7% is still a wonderful interest rate, but that's where we're at. So 3.7, they're projecting the Freddie Mac, Fannie Mae, and everyone are projecting around that number of the fourth quarter to be about that 3.7. And this is what so many people have asked me, all the graph here. People are saying, hey guys, Eric, we hit the peak? Did we actually miss it? Did we miss the market? Did we miss selling our property for top dollar? And I will tell you this, there isn't anything missing. If you actually owned your home during this period of time, look at the increase of the acceleration of your equity growing in your home. Yes, maybe we've peaked, but the question here that we need to look at that is, are we going back down? Are we just flatlining right here? And so you can see that these companies right here are just have more of a flat line that's coming up, that we're plateauing right here. So don't think that, hey, I missed the mark, that should I have sold my home? Could I have made more money? because look, guys, the equity of this is completely up, and now we're just plateauing, and we're going to be having this nice smooth ride here for 2022, is what the experts are telling us that we're going to have. So home price forecast, this is interesting, for 2022, what they're forecasting, the appreciation, because people are again saying, do I wait? Do I buy a home? But here's what they're kind of saying. The big boys are saying a 7.4, 7%, 6%. So average 5.2% is what the increase of your acceleration or your appreciation will be for the upcoming 2022 year. So again, if you're on the fence, do I buy? Where do I go? This is just basically letting us know that we're going to continue to see that. Now, this is getting back to the normality before pre-pandemic levels that we're actually going to be seeing this general idea here. We're not going to have that 18 or 19 increase that we had back in the last year and a half. This is going to be just a nice, healthy 5.2% average. So overall, do you think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates? And we do think home sales will continue to rise and actually reach a 16-year high in 2022, says Mary McClare Bolton Smith, the senior leader research of CoreLogic. So guys, I really feel from just looking at all these numbers and things that there's still time to buy. I personally have gone out and purchased a couple rental properties in the last month and a half because there's still deals out there and still homes that you can actually purchase at good rates and at good prices. So feel free, guys, share this information and enjoy the market update, and we'll talk to you next month. Take care.